Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you as always. Well, it's really hard to get a feel for this market. We're up yesterday. We're down today. Who can really even tell why? Just volatility is the new normal, at least for now, until we sort of find our footing, and who knows how when that could happen. So amidst all this, we have earnings reports, we have guidance cuts, we have warnings from companies, we have companies pulling out of conferences, a lot to talk about. Just volatile markets make for a lot to discuss on the show. So that's what we'll do. Our guest is Marc Chaikin. He will join us at 8:15. Joel, what's the word here overnight?
We got some red, Spencer. Down 61.25 handles at 30.53.5. Pre-market high, that was made real quick right off the open at 13.75. We just missed the close. Pre-market low 30.46. We do have some support under here. We do have a pair of lows from Tuesday and Wednesday at under 3,000 at 29.73 and 29.76.50. Gold and silver are both trading up. Gold is up 9.10 at 16.52.10. Silver up 8.4 cents. It's 17.33. Crude as well. Crude's in the green by 15 cents. Trading in the middle of the range. And Bitcoin up $415 at 9,117. Well, Triple D, I was calling for an inside day yesterday, and it wasn't quite the inside day that I imagined.
No, this was not the inside day we were looking for.
No.
Star Wars, I know anybody gets that.
Yeah.
It was an inside day, though.
It was.
You could have an inside day on the inside day. It's possible here. We got the low yesterday was 303. I'm looking at the SPY.
Yes.
The overnight stuff. So the low yesterday, 303.33 on the SPY. You're still 2 points away from there. Do we have the inside day on the inside day?
I think that would be a blessing if we had that. And I'll even give you more room because you'll go with the SPY. You'll go with that SPY low, but the SPU low, the true low of the day.
The true low, the overnight, the 24-hour, actually the 23-hour low because they close for an hour. But
23 hours at 15-minute low is way down there. So I'll go with the SPUs and see what happens. And right now, we got news. It's a news-driven market, and we've talked about before. We can talk about technical analysis, but Dennis, you made a comment about if you're looking at 5 and 10 and 15-year charts and monthly charts here, and you're seeing some major bottoms and stuff, you're still not cherry picking on those.
No, I'm not. I sold more stocks yesterday out of my long-term portfolio. I'm actually very spooked, and maybe I'm going to be really wrong, and we're going to be back up all-time highs. I know JC Peretz was tweeting yesterday, thinks we're going back to all-time highs. I'm on the other side of this trade. I don't think that's the case. I just see so many reasons not to own stocks, and this has been the case before, but now they're saying overnight, if you're looking and you're coming in, why are we down significantly? You could say, okay, well, there's obviously cases going up. California has issues with their now state of emergency. We have another ship just off the coast of San Francisco that's obviously got issues as well here. Person dead from the previous show or trip or previous cruise. So lots of things. And then the other thing that I see in my timeline, in my Twitter timeline, a lot of people are talking about this morning, and maybe that's the reason that they're spooked, is they're talking about a second strain. So they're talking about out of China that they're saying that this thing is mutated, and there is now 2 strains. So we were talking before about people getting reinfected with it. It sounds like that may be not the case. There just may be 2 strains of this floating around. So that's not good news either. So there's lots of things to be worried about. With that being said, we're still significantly off the lows. We still have a lot of stocks that, are looking fairly healthy. The V bottom, if you're talking about, is still kind of in place here. So technically, the technicals don't look terrible. I mean, nothing looks great, but it doesn't look terrible. But I just think there's a lot of things to worry about here. And we had now another kiss up to that 50% retracement yesterday. I took that opportunity to lighten up. I sold a lot of preferred stocks out of my portfolio. You say, why would you sell preferred stocks? Well, during the financial crisis, preferreds really got hit hard. These things are like 1% off the all-time highs. I'm like, you know what? Nothing materializes. I'll be able to rebuy most of these preferreds. Like look at PFF, for instance. It has a pile of these preferreds in it. Look at where it is relative to the recent high. We're at 37.24. Recent high was 38.24. So you're talking it's like 2-3% off the all-time highs. There are many preferred stocks that are right near the all-time highs.
Yeah, I see that.
So I'm just looking at it and saying, you know what? These are usually low risk investments, but in the financial crisis, a lot of preferred stocks fell 50-60%. We're not in the financial crisis here, but I don't think we're in a situation where it's completely absurd to think that we could fall 20 or 30 or 40% if this thing gets really ugly. And if it does, the markets do start to implode like that. I think, my risk of selling 2-3% off the all-time highs of my preferred stocks will look pretty good because those preferred stocks will be down significantly. They won't fall 20-30%, but they will fall significantly as well. So all I am is lightening up risk here again. Maybe, like I said, I'm going to be wrong. I have so much cash in my portfolio now. I kind of throw up when I look at it. But at the same time, I'm very nervous about these markets. So it looks like it was a good move because I did this yesterday in the last hour of trading when we were just up substantially and we were close to that 50%. I also sold a big chunk of my Virtue Financial. Huge move in it yesterday. Again, it was, they're trading well right now.
22 skidoo.
That's what I was looking at too on the chart here too. I still have some. I had a huge chunk. It was one of the biggest positions in my long-term portfolio. Obviously, it was ugly. I'm still worried, the Democrats, Bernie. If Bernie was ever to get elected, Virtue would just implode. So this was a little bit of the Bernie rally yesterday. We talked about it on the show on VIRT.
Rally, yeah.
But also, they also had commentary from the day before, and I think they gave a little bit of guidance. They were looking at, their revenues, and the revenues were up. And that's not surprising because we know this trading environment is going to be very good for a company like Virtue Financial. So still hold a piece, still hold a good chunk, but I lightened up. And I lightened up a lot of stocks, like I said, a lot of preferred stocks. So the core stuff, the Apple, the MasterCards, the ones that I've had in there for, MasterCard for a decade, I'm holding on to that stuff. And I still have some exposure to the long side, but it's limited here now. And I just there's too many unknowns for me. If I'm wrong, maybe I'm going to struggle to get back in, but it seems like they always give you a second chance. So I think I'll eventually be udable to still get back in, even if I'm wrong.
Another astute follower of the market, a frequent visitor on this show, Sean Udall. I was talking to him yesterday, and he sees a 75% probability the market goes back to new all-time highs. So you got Sean Udall.
How does he come up with that percentage? I want to talk to him about where he comes up with this number.
Just based on a lot of his.
I don't know. When you throw out 75, there's no way to calculate any percentage.
All right, maybe I overstated that, but he's fairly confident that we're going back to all-time highs. So I'm just giving. There's different perspectives.
There is. This is why we have a market, and this is why we're yo-yoing. Joel, it's such a great point. This is why we go up 1,000, down 1,000, up 1,000, down 1,000, because people are all over the place on this. There's bulls and bears, and it is a heated debate here. And like I said, JC Peretz was in Twitter. I saw him yesterday saying we're going back to all-time highs. Basically, he was saying that. It might be the V bottom. We're 50% back already. So it's not absurd to think it's possible. You know what? My money's the other way. I'm not my trading. I'm going to be trading no matter what. But I want more cash because I don't know that we are not into something really serious here. What happens? You saw in Italy. Did you see that soccer game played, Spencer? You must have saw the pictures.
There's no
soccer game with no fans in the stadium.
Yeah,
so
I saw
that's coming, man. That's gonna be here. I think that's gonna be here. And Marc's gonna come on in 5 minutes. He wanted to talk about this too. So
I know. I'm kind of like, whew, Marc's coming on. But you know what? I want to say one thing. I don't know, like, if we're gonna get cut in half, 50%, and but going back to all-time highs, I'd love to see it. I just think that the just pure market dynamics will not allow for that. We're in a very uncertain political election year. And, if there's anything, if you guys been listening to us over the years here, overhead supply I mean, holy mackerel. How many people are looking for a rally here like we had yesterday to lighten up? So, I mean,
I am. I used it again. I was already light. I lighten up more.
I hope we see an all-time high again, let alone, this year. I mean, do you look at the perspective? Like, pull up a monthly chart here, Spencer. I mean, look at the monthly chart. This monthly chart, just do the SPY. I mean, look at that move from '09. And like
if you think stocks are cheap here, I think that's what you're getting at. If you think stocks are cheap here, even get rid of the coronavirus thing. Stocks are not cheap. Stocks are not cheap here. We're what, 17, 18 times earnings, and so we're not really super expensive, but we're not cheap. You think, wow, what a deal. I got to come in here and buy Apple at $300 yesterday.
Woo!
What a deal. It was $100 2 years ago. And they got, they've already warned. We got China trying to come back online here. We don't know what's happening with China, though. You can't believe anything coming out of there either. I'm going to say you cannot believe anything you're seeing out of there. Their markets are up here again this morning. I believe their markets are very manipulated, meaning that they are just buying their markets just to hold them up. But anyways, you can't believe anything. China's just basically saying, oh, they've got this thing whipped. Who knows? We don't know that. But I'll tell you, the rest of the world doesn't. When Italy's playing soccer games without fans in the stadium, it's a concern. It's a concern.
I'm going to the Michigan basketball game tonight.
Okay. I think I actually regret going on that trip to Jamaica. Because I see this. So what happened with the cruise ship here? 2 minutes on the cruise. So the cruise ship off the coast. Can you give us the details? Do you have in front of you, Spencer? The cruise ship off San Francisco.
Yeah, this is Princess Cruises. Unfortunately, the same cruise line that had issues over in Japan.
Carnival owned.
Yep, Carnival owned. This is the Grand Princess ship, and they're essentially just hanging out off the coast of San Fran right now, as officials try to figure out how to test the entire ship. As of yesterday, I think 10 or 11 people were showing symptoms on board because somebody who was previously on the ship has died from coronavirus.
Oh.
So they have to figure out how to test the entire ship now.
So the previous cruise from when the dates were that like 2 weeks ago, somebody finds out and they test for coronavirus. They died and they test them and they had coronavirus and they were on that cruise from 2 weeks ago. So now they're worried about, and they're saying there's people sick on this cruise now too.
Yes.
So this could be Princess
showing symptoms. Yes, there are.
Yeah. So this could be just part 2 here. We're going to have the same deal happen again. If you're going on a cruise right now, honestly, I think you're nuts. My opinion, I think you're nuts. I honestly think I was nuts to go on that Jamaican all-inclusive cruise. Way worse. You're breathing all the same air. I mean, you're right there. You don't get, you're right. And then if one person gets on the ship, you saw what happened, the Diamond Princess. And now you got a second one. I mean, you think about this and people are saying, how can you go wrong with Carnival Cruise Lines? CCL at $30 here this morning. It's got a 6.5% dividend. It's down, 20 points. It's coming back. We heard Ivan Feinseth saying it yesterday on this show. I think he's wrong. This is my opinion. Ivan, love you. I'm taking the other side of that trade, though. You know why I think you could be wrong here is because, one, even if they get this thing solved, just like we were saying, think about the lawsuits that are going to be coming at Carnival now. Now you have 2 ships. The way they handle that, there's a lot of people that died on the first one. What do we have? Like 11 or 12 deaths? Or is it more than that? I mean, there's going to be a class action suit coming at Carnival for this. There's nobody thinking about booking a cruise right now. The odd person, but I will easily say 50% of people who are thinking about going on a cruise are probably thinking twice. And I think the number's a lot higher than that. So I don't want to own any cruise ship stocks, even though they're dirt cheap from a fundamental basis. And if we get through this, there will be a buy eventually. But there's going to be some lawsuits coming at them too. And they could have a pretty good case. I mean, the way they handled the Diamond Princess was not, and let's bring Marc into this conversation too. Maybe we can.
Yeah, we need Marc.
I want to see where maybe Marc can talk me off the cliff. And I'm not saying what's the end of the world here. I'm just saying I don't want to own a cruise ship stock.
Marc, do you have thoughts on that?
I don't want to own any stocks, which doesn't mean I'm.
You're supposed to talk about the range.
There we go. There's our word of wisdom on Wall Street. I don't want to
own any stocks. No, I'm scared, Marc. Why?
Well, let me clarify that. I'm not suggesting that people sell everything, but even in investment accounts, I think you got to keep your cash in your wallet. You've got to sit on the sidelines and let this thing play out. And there is, to quote Donald Rumsfeld, there are so many known unknowns that this
Exactly.
is fraught with uh, potential danger that we've never encountered in our lifetime in the stock market.
Whoa, those are big statements, and statements that I've kind of been making for the last month, but maybe not to that bold. What first, let's take it. We were just talking Carnival Cruise Lines here, and they have a second ship now. A second ship. And I just gave the case that I think there's some major class action suits. Even when this thing gets settled, I think there's some major class action suits that are going to come out Carnival for the way they handled the first cruise. And now we got a second one, and we got people who are infected because somebody died from the previous cruise on the ship. This sounds like a mess. I mean, you look at it from a fundamental basis, you say, oh, it's trading very cheap right now, 6.47% dividend. But when you start considering all of these other factors, it's kind of scary.
Yeah, I agree. You can't use normal metrics in what is a panic reaction to a potential pandemic where we just don't know the scope of it. Move away from cruise lines. You shouldn't own cruise lines. It's obvious. You've got conferences being canceled. You've got Amazon telling all their employees to work at home because someone was infected in the Seattle office. Think about where this leads. The country could seize up. Italy, no public attendance at sporting events. I don't want to be an alarmist, but this is just the reality.
Yeah.
I'm sorry?
I said you're being a realist, but you.
Well,
Yeah,
you just look at what's happening. It's incredible. It's incredible that the markets have held up this well, in my opinion. They've held up really, really well. I mean, we got back to the 50% retracement yesterday of the whole move. I mean, It's given you a lot of opportunities to lighten up. If anybody gets the beats on, and and this goes forward and the markets really start going, they cannot say we didn't see this coming. So and maybe it's going to go right back up to the all-time highs because maybe there's people like me who are kind of bearish here or full-on bearish. But I don't like seeing a major soccer game played without fans. I think that's coming here, don't you, Mark?
I do. And, things like the Olympics are at risk here. It's just a situation where risk management is more important than fishing for profits. And
well stated.
There are some, the biotech group is doing really well. Biogen and Regeneron are just strong as can be. Obviously, people are praying for an antidote or some sort of vaccine. The best, I got an email that was forwarded from someone who first saw the coronavirus in 1972 at UC San Diego. And he sent out an email to his friends. He said, I don't believe there'll be a vaccine before the end of the year. So
I
people,
think the math says there can't be. I mean, unless they really try to hurry it, but you got to do testing. They don't even have it ready yet for human.
Yeah, it could do more
testing.
harm than good. So the question is, what do traders do in this market? Well, first of all, if you get a rally like you saw yesterday, up to a 50% retracement, you don't wait and say, okay, I'll sell on the opening tomorrow. Maybe they'll go a little higher. You just take advantage of it because the overnight risk in the market, both on the upside and the downside, is too great. And you sell down to the sleeping point, which has obvious implications because it means that everybody has a different pain point. But I don't think this is the time, unless you're a very nimble day trader with the heart and soul of a machine. I don't think this is the time to be putting capital at risk in the market, except on the short side.
I mean, there's times to make money and there's times to protect capital, like you were saying. And and people are saying, I sold a lot of my preferred stocks yesterday, and somebody's asked me in the chat, why would you do that? Well, here you look at something like the PFF. It's come all the way, significantly back, and it doesn't move a lot, but you're jumping in there for 5%. Do I want to go in here and risk money, risk real capital for 5%? Because people say, well, preferreds never go down. These are people who didn't trade during the financial crisis because preferreds collapsed during the financial crisis. And I don't think we're in the financial crisis, but I'm not sure that it's not, this couldn't be a real epic event. So here you have a chance on something like PFF to sell 2-3% from the recent highs. I mean, I sold almost all my preferred stocks this day. I have a ton of them. And I'm like, you know what? This thing passes. I'll get back into some of that stuff. And it's not going to be significantly higher. These things aren't blast. PFF isn't blasting off to 45, 50 bucks. I mean, it's not happening. So I think I'll get a chance to get these back. But During the financial crisis, I did the same thing. I lightened up the preferreds way early. I actually went short a lot of preferreds way early. And those things really collapsed because we had a different market then. And like I said, I don't think we're in the financial crisis, but if this thing gets ugly, don't think they won't hit some of the preferred stocks too.
What's the temperature of your viewers? What are they thinking? Are they looking for buying opportunities? Are
Both
they nervous?
mixed, we're very mixed. Everybody, where like I see this is, people who like JC Peretz was tweeting yesterday thinks we're going back to all-time highs. I'm on the opposite side. I don't think that's happening. But I mean, you have people, this is a real battle zone here. There is people who really believe
Marc,
this is going to be a V bottom, and we got to come back. And then you have people that are on the other side of the trade. Marc, can you hear us?
I can hear you. Can you hear me?
Yeah, we hear you now.
Yeah. I think this is a time when risk management is more important than profits. That's that. If you take that approach, you just let this play out. But you've got March and April where everybody agrees the virus will keep expanding. And you're going to see one-off things like you saw in New York City yesterday. A lawyer in a small law firm, 8 people near Grand Central Station, was diagnosed with the virus. He's been taking Metro North up and back to one of the Westchester suburbs, which is where a lot of very wealthy people live. His son goes to Yeshiva University. Son got infected. Wife put him in the car to drive him to the emergency room. Wife got infected. This guy's been in Grand Central Station, which is sort of the central focus for all northern commuters in New York. Again, I don't want to sound like an alarmist because these things are going to play out the way they're going to play out. But let's put it in a different perspective. From October on, I started saying in my weekly market letter, let's look at what could go right in this market because I think we're going to have a melt up. I think now you got to think the opposite way. What could go wrong here? And what could go wrong is that the country seizes up, that events get canceled, conferences get canceled, people hunker down. I was talking to a friend of mine who's on the board of a company that makes, ironically, surgical wipes, the antiseptic wipes. They've been in business forever, private company. They got 3 calls yesterday saying, are you guys thinking about going public? Costco stocks their wipes. They're out of them. They can't produce them fast enough. So you're in a situation where the known unknowns could swamp all the technical levels and all the bullish sentiment that's been built up because of a strong economy and so forth. And I'm not predicting a recession, and I'm not saying the market won't look beyond the next 2 quarters, but here's a very sobering thought. Even in the warm weather, if the virus goes away, a lot of epidemiologists are saying it could come back in September and October. So we could have a period between April or May and August where things look better, and maybe that's when the market goes to new highs. But come the fall, very smart scientists are saying this could come back again.
I mean, let
me hop in here first.
Go ahead, Joel.
Because we're getting people in the chat. You ask about our sentiment. Some people are really upset with us for talking about this, and then some other people on the other side. And I think that the best way to look at it is that this is just like a new reality. This is something that is not going to be gone in a week or 2 weeks or 6 months or a year. This is people want to make the flu comparisons. You can make the flu comparison. This is something that we're going to be dealing with for a long time. And, are there going to be vaccines? I mean, are there going to be cures or whatever? This is just right now. These things happen over the course of time, and we don't know the source. So you can freak out about it. You can think it's not, it's not a reality, but I just think it is. It's right now, it's the reality, and it's going to be for quite some time. What the effects are going to be in the market, right now we're seeing what the effects on the market. But, if you think that, just like snap your fingers, this is go away or going back to all-time highs, I think that's a very unrealistic expectation.
Well, Joel, let me ask you this, and I don't want to make it personal, but it's the only way I can express this. If you guys had a conference in San Francisco next week or in Seattle, would you get on a plane without trepidation to, do your job and speak at the conference?
In San Francisco?
Well, yeah. Would you get on a plane for 3 hours?
No,
4 hours.
I just got off a plane. And I didn't want to. So my story. I went to Jamaica last week. Worst week to take off ever. We had this trip booked a long time. I almost canceled because I didn't want to go on the plane. Anyways, it was a small jet. We were flying from a very small airport. There was only 70 people on the plane. But at the same time, I thought about it the whole time on the plane. I did not want to be on the plane.
I have a trip to Arizona.
And this was before all this stuff happened. Now that we've seen the markets and what's going on, no, I'm done flying for a while.
Well, Joe, rumor has it that ganja, Dennis, rumor has it that ganja is a very strong, antidote to coronavirus. So you may be just fine.
Mark,
maybe I should be going that.
I have a trip planned in a month to Arizona, and I'm planning on going on it right now. I have trip insurance, and I'm going to a Michigan basketball game tonight. And, at this point,
you're not changing your lifestyle for it.
Now you're young and healthy, and that makes a difference. The guy in New York who got sick was at risk. He was someone with pre-existing conditions, pulmonary conditions, and those are the people who really have to worry about it. Older people, people with pulmonary problems, and not pulmonary, but respiratory problems. So young, healthy people, much less at risk.
Right. At least that's what the numbers are saying now. Like, we hope, that's the case. But then there is some people in their 40s that have died from this too. So you're not completely out of the woods if you're young. But
no, but the odds are, unless you're
better odds,
of a certain age or have a some sort of respiratory condition, like Mark said, even if you get it, the odds are you'll recover. So that's important context that I feel like we have neglected to mention that on the show today.
I wish I could leave people with a positive note. And the most positive thing I can say is, if you're a long-term investor, sell down to the sleeping point, sit on your cash until you see some sort of washout. We might even test that 2350 Christmas Eve massacre low, which would put us in bear market territory. But at a minimum, 20% down, 2750. We were pretty close to that the other day from the high. You've just got to, as I said, practice risk management. If people don't want to hear it, then they're in the casino, even though they know the odds are stacked against them. And
Mark, one thing before we let you go, and you hear this so much, with people. I can't sell now because I'll be taking a loss. But what they're taking a loss from where things were when they made an all-time high. Okay. But if you own something at 10 and it went to 50 and now it's at 30, if you sell at 30, you make 20. You don't lose 20 because you didn't sell at 50. How do you, when people approach you with that kind of attitude and mantra, like, what do you say to them?
Well, I say that the market doesn't know what you paid for a stock and doesn't care. And also, the other thing you're hearing now from people who are in some of these biotech stocks like Enphase that went up from 5 to 60. Oh, I can't sell now because I'll get killed with taxes on short-term gains. That is pure nonsense. Just protect your capital. Taxes take care of themselves. So I would, the answer to your question, Joel, is just tell people to protect their capital to the point that they're comfortable with what they sit on.
That's what you got to be. You got to be comfortable. Like, I would say, look at your investment portfolio and, don't think that this could fall 10%. I can handle a 10% loss. It's not absurd to think that we could be down 20, 30%. That could happen. We're not saying it's going to happen, but it's on the table right now, because we don't know where this thing is going. And people during the financial crisis thought the same thing, Mark. They didn't want to take their profits. We had been on a pretty good run in 2007. And they thought, well, I can stomach a 10% loss. The markets went down 70%. So this is not the financial crisis, at least not yet. But this is not a market that I think 20, 30% pullback isn't absurd.
Well, and it's a market where a 50 basis point Fed rate cut is just pushing on a string. I think that was the most pointless move that I've ever seen. And there's not one person who disagrees with me or you on that. I just don't get it.
Why'd they do it?
The market didn't get it. That's why the market sold off. It spooked the market.
Yeah. I think that investors and traders have to realize that we've had major sell-offs in the past, but they've been triggered by events. Portfolio insurance in 1987, a failed merger in 1997, United Airlines. Brexit, Greek debt crisis, Chinese trade wars. These were all things that could be fixed. Even the Kuwait war, the Gulf War in Kuwait, these are things that could be fixed, or we're going to be over, or where you could measure the impact and know when things were turning. We're just in a period with known unknowns. And
Marc, are you using any covered call strategies here? Bull for Trading is asking, what do you think about the covered call strategy? For me, yeah, you're covered to a point. I mean,
that's like having breakfast.
I think
with
it's
your
the
grandmother.
wrong strategy for this environment.
Yeah, I have in my own account right now, I have a vertical put spread in the SPY that expires in mid-April. So that's my way of protecting assets on a drop all the way down to 27.50. The 275 strike is the one I sold at the bottom of the spread. So I'm long the 305s and short the 270.
That's
275s.
Way to play it, Marc, because then those days that we rally and we sit still, you get the decay on the one that you're short. Yeah. No, definitely been employing that strategy a little bit myself. The other strategy, I know, Dennis, you said that's the exact wrong thing to do, but it was wrong the entire time. But if you are using the money that you sell the calls with to buy underneath puts, that would be, and that strategy has just been a loser for the last decade. But, if you're so inclined to sell the calls, you're bringing in the premium, you have the money in your account. Hey, you're only protected to where you sell your call at.
Rating calls works well when you think we're due for a correction and we could pull back 5 to 10%. This is the case we're at right now. So right now it's still looking okay, that strategy, but it does not protect you in a financial crisis. It does not protect you in 2001, and that was extreme valuation. So that was the reason for that. But the financial crisis, we weren't in extreme valuations. We just had a collapse. This is something that could potentially shut the economy down short term. You think about like that Italy picture with those fans not at the game. I just envision baseball season's coming. Are they going to delay baseball season? Are they going to play them without the fans? This thing is spreading. You cannot deny that it is spreading right now. And we're not testing anyone yet. Wait till we start testing. Wait till it starts showing up that, hey, we got a couple thousand people over here that got this. This is community spread over here. There's going to be people that don't want to leave their homes. Well, that's going to slow the economy down. So don't even think about the lost lives. Just think about it from the economic perspectives. It's got to slow down, I would think. So there's so much risk here. Risk reward just isn't there to buy stocks right now. I
agree 100%. And again, Amazon has told all of its employees at its Seattle headquarters to not come into the office. So who does that affect? It affects the people at who provide food,
restaurants,
beverages to these people near the office. Yeah. So rather than a 50 basis point Fed cut, there should be some way to get income to the people who might be starting to lose it, because the service providers are, in these big metropolitan areas, and it's going to spread. I wish I could say I had the magic bullet that the president says is going to stop this whole thing, but
Marc,
there's no miracles.
Some people are talking about, like the Chaikin money flow indicator and stuff.
Yeah, what are your indicators saying?
Well, the Chaikin money flow went negative last week for the first time in 5 months. It had stayed in the green even on the pullbacks that we had in January and in December. I don't think technical indicators help you here. I think levels help you. So what I put on the second leg of my position yesterday when they rallied up to a 50% retracement. I think levels are the key here, not technical indicators. Technical indicators are so oversold that they cry out for a bounce, but that's in normal times.
What about a young buck like Spencer over here, who has like a really long-term, investing horizon, 50 years at least. How old are you, Spencer? 27, 28?
I'm on like a 90-year horizon.
90 here? Yeah. I think that's different. I think that's one thing that I try and stress too, is like, where are you at in your investment cycle? How much exposure. You talked about your sleep level too, but I also, think that, you have to look at it, where you're at. Are you 20, 25, 50, 60, 75, 80. I think that's one thing people, what kind of advice do you give people along those lines?
I would say keep 20% in cash, because then you're less likely to panic on some low day. That's the biggest problem. Human nature says, oh, I can handle it. And then you're down 10% on a day and people say, that's it, I'm going to throw in the towel. On the other hand, if you're sitting on 20% in cash, even in Spencer's situation, someone with a very long-term view, you're thinking, where are the opportunities, not am I going to panic and sell out? So that's why I say sell down to the sleeping level. For some people, it's 40% cash, some it's 10. I think 20 at a minimum is the cash level people should be holding right now.
Yeah, and just for some full disclosure, I had a lot of cash. I put some of it to work on Monday after last week, but I still have a lot. I couldn't tell you what my cash.
What'd you buy?
My cash allocated. I bought mutual funds. I didn't.
Just funds, ETFs.
Nothing that you would be interested in. But right. I couldn't tell you what my allocation is overall across all my accounts, but I do have a substantial amount of cash that I haven't dealt with it yet, and I dealt with some of it on Monday, and I'm trying to figure out how to deal with more of it.
Mark, what if you sold down to the comfort sleeping level and you're still not sleeping?
Then you haven't sold enough, or you need Xanax or whatever it is. But take a look at the biotech stocks. I mean, if you absolutely think this market's going to rally, Biogen and Regeneron have unbelievable charts. Regeneron made a new all-time high yesterday. So if you get a chance to buy these on weakness,
they're working on a vaccine.
Yeah, they're all in theory working on something, and repurposing old vaccines and so forth. So maybe the biotech ETF is a place to look if you want to be exposed to the upside.
One thing too, folks, Mark's given his thoughts today, but I've been thinking over when you were on 2 weeks ago, and your sentiment was exactly the same. And
thank you.
Talk some of those indicators. I just don't want people to think that you're hopping on the bandwagon here after the wagon has left the station.
It hasn't left the station though. Like with the rally that we've had,
it hasn't.
We haven't left the station. You've had lots of opportunity. You're probably going to get more opportunity here again. But I mean, eventually, it took a long time with the financial crisis too. And like I keep comparing it to that. And like I said, I'm just saying this is the biggest event I believe we've had since then.
Correct.
And it took, people were, discounting it. Oh, we'll be okay. It was forever. It was like 3, 4, 5 months to really start to happen.
Another thing that we should be talking about, if you haven't, is the outsized effect that ETFs can have in a decline. The SPY, QQQ, IWM, the market makers have to match up a sell order with a buy order. If there's no buy match, then they have to sell the 500 stocks in the index, across the board. And that has happened in this 8-day window from the top on the downside. So in previous crises, you didn't have all this money in passive index funds. And that's, forget the computerized algo traders, we know what they're doing. But the mechanics of the ETF market speak to potential waterfall selling if there's no matching buy order when someone comes in to sell SPY.
I mean, as much as it has pumped those main 10 stocks up for the last 5 years, or even you could argue the last decade, it could all unwind very quickly as well. So, and if we ever got into a serious situation, I mean, I think that's what the fear was. We saw Apple fall $60 in 1 week, and people were like, how is that possible? And they bought it right back thinking it's a great deal. But I mean, maybe it is, but maybe it was. It looked to be a great deal when they were buying at 260 because we come all the way back. But those ETFs all have to unwind at the same time. That's where you could really get some capitulatory selling.
Yeah, I agree. And they're selling all 500 names. They're not just selling Apple and Microsoft, Facebook, Amazon, and Google. So it's downbeat. And you're right. 2 weeks ago, I was cautious. And in fact, you guys tweeted out that afternoon, Marc Chaikin is cautious for the first time in months. So I take no pleasure in having spotted this There's a health, this is a health crisis, not a financial crisis, but it can lead to behavior that is not conducive to a growing economy.
Mark, what if I give you a hypothetical scenario here? Let's say we get a vaccine tomorrow and a cure tomorrow. I mean, there's still kind of impact. I mean, for me, a couple of weeks I was going, okay, Q2 is probably not looking too good. Now I'm kind of thinking Q3 is not looking real good. And then I don't know about Q4, just a few, what if we did have an immediate solution to the crisis, to the problem? Isn't there still like a lag effect? I mean, from everything that's going on for us even to catch up for these companies from what they've lost in productivity up to this point?
No, I think the markets would view us as a one-off event, almost like a write-off, and look beyond. So I think if we're fortunate enough to see a vaccine or treatment like Tamiflu, which we don't have yet, the markets would look ahead, whether it's 2 quarters or 3 quarters, and assume that the world is going to revert back to where it was. So
that's the bull case.
But that assumes that there's a vaccine.
Yeah,
there isn't one.
One other thing too. I mean, and man, I don't know how the hell you're going to factor this into it, but tax season. I mean, people, if there's, I mean, you had to do your tax loss selling by the end of the year here, but that's just another factor that, hey, like maybe some people, I'm going to take these capital gains. I could carry less. I could do that. So I think that's another thing over,
We're not in December.
Well, not in December,
scared to take the gains out to pay tax for a year yet.
Yeah, but now if you're looking, don't you look forward to like your next year's taxes? I mean, aren't you thinking about planning for that as well? So I don't know. I just think
that's why I like the Rumsfeld phrase, known unknowns. There are just too many known unknowns.
That's a good place for us to end this. I think
Mark, man, we've kept you forever.
Yeah.
I love it. This is the best dialogue we've had, and hopefully it's been helpful for people who are listening and watching, because this is not going away quietly.
I hope so. Marc Chaikin is the founder of Chaikin Analytics. Marc, thanks for the time. We'll talk to you again in a couple of weeks.
Pleasure, guys.
Thanks, Marc.
Keep your cash in your wallet.
Okay. Thank you, Mark. S&P futures just made a low of 30.37. We've bounced up to 42.50. I'll give you an intermediate level that Dennis will like, because it's the spider low from yesterday, and the S&P intraday low was 30.75. So we haven't hit that level yet, and that's a potential level of support, kind of trapdoor down to those pair lows at 28.7650 and 28.73 even, and keeping my fingers crossed for an inside day. Let's do some stocks. Some stocks have earnings. Let's do some earnings.
Well, with Zoom.
Yeah,
that's the one where I wanted to start off with, because Zoom is interesting here. So I'll pull up the chart. Zoom reported yesterday after the closing bell. Their EPS beat 15 cents for 7 cents. Their sales beat 188 million versus 176 million. They gave guidance that was strong for earnings and for sales, and it wasn't enough. And I want to read you a comment from an analyst, Stevens here, and he noted that the year-over-year sales growth was 78%, and the buy side expectation for that was an 80% year-over-year sales growth. So they really blew it away, and it still wasn't enough.
One thing to say here, and we saw already some money come in, when this thing pulled back to 102, 103 after hours, it was 103, I believe, was the low, this is seen as this coronavirus play where people are going to be using Zoom more because they don't want to leave their homes. If the market really gets ugly, this is a stock that could actually hold up because of that, or potentially even rally because of that. So I think this is still a stock that people are going to buy on pullbacks. Valuation makes 0 sense. I'm not putting it in my long-term portfolio. But as a trade, I mean, maybe a lean on the lows like the 97.37 Feb 28th. If you get this 105, you got to give it some room. In this environment, you can't be risking $1 and hoping to get stopped out on everything. But I would say as long as we hold above the 97.02 Feb 24th low, and then we retested it back last week of February 28th at 97.37, I think there's a good bottom there at 97. So I know you're 12 bucks off it right now, but it's volatile markets. I do believe this is a stock that people will be looking to buy the dip on though. So I'm not full bearish this thing.
You had a spike low here, down to 103, and I think Spitter's playing this one. I think he had some puts. I hope he held it into the report. I noticed a little when I looked at this yesterday with him. I noticed a little bit of a trap door here, and it kind of looks like they already knocked through the trap door and they survived. Basis the daily charts. That's all I'm looking at. Under 112.11. You went to 10, had a low at 102.50. Well, I'm not the only one that can read a chart, and people jumped out ahead of that level at 103 even, and now you're bouncing back. So when I see this type of 15-minute chart, I see a spike low, and I see people saying, I missed the low. I need to buy. So I don't know if the pre-market low is going to hold, but I think I'm in agreement with you on this one. As you fall back, you will find buyers in this one. You're down 760. I will just tell you that this is interesting. Old support, new resistance on the bounce after you hit 103. You stopped at 112. So if you're looking for more upside on this, bust through what? Actually, it's 111.99. So there's your resistance and your support in this one.
Where else we can go to retail? We can go to.
We'll go Splunk last night. Splunk was a buy the dip opportunity too. People came in hard buying the dip on this thing last night. Give us the details and then just go through.
All right, SPLK earnings after the close, like Dennis said. EPS was in line at 96 cents. Sales was a slight beat, 791 for $783 million. The Q1 sales guidance what was light. I mean, guidance really at this point is hard to gauge with the virus happening everywhere. So I wouldn't put a ton of stock in anyone's guidance unless they're lowering it. But the earnings report was good.
I think with this one, I mean, you just got that kind of drop like that. You held a short position. You get a bump up. Maybe you're playing some puts, and you had the 140 puts, and you could buy the stock at what, 133? How low did we get on this one? We got all the way down to 132, and you got to bounce. But I'm not going to really try and pick a high and a low here. I'm just going to say, man, it's quiet here, like around 150. It just seems like the Bulls and Bears are battling out. We're currently holding 150. Hold 150, maybe a little bit more upside in this one. After you did hit that wicked low, you bounced up to, looks like, 155.55. So there's another 5 points on the bone here. If you're looking for a rally, that is your after hours high.
Let's just jump over to a few other stocks. We're going to get Costco tonight. I want to talk Costco. It's been an absolutely ridiculous rally here. I don't know what to say. Everybody threw this thing away at 270 last week with the overall market, and then they decide it's a coronavirus play and we're going to buy the hell out of it. It's nonsense to me, but again, this market doesn't make sense. So it's always had good numbers. It's irrational to think that it's not going to have good numbers here again. I mean, they blow it away every single time, and we know people are going there like crazy too. So maybe they're going to give good guidance here too. I don't want to be short this one if it's seen as a coronavirus play. I don't really, it doesn't make logical sense to me because, like I said, if people are going and shopping right now, then they're shopping to not shop later. But with that being said, the report tonight, I don't think they're going to say anything bad.
All right. First thing I want to say is BJ's reported this morning, same business. Their earnings were okay, EPS in line, sales beat, and that could give you a clue as far as what Costco does.
But this quarter is not going to reflect the activity from last week, correct?
Right.
Just always busy at those stores, though. And if they give any commentary that they're seeing, a lot of people coming or seeing it very busy, like somebody said, it's busier than Christmas. So right now, it was pretty busy when I went in there too. It wasn't absurdly busy, but it was pretty busy.
Can I give you a little Costco tip?
Yeah.
Like when you're checking out, everyone, you weigh this funnel of the store, they funnel everybody left, right?
Yep.
So when I went there on Saturday or Sunday, there was a huge line. It was backed up like 4 or 5 aisles.
You go around,
but you go down one of the aisles, and then you cut up like towards the entrance.
Yep.
and then I checked out right away. No one wanted to get in line behind me because I had a cart and a dolly. So no one wanted to get in line.
Second thing
Joel jump in the queue.
Second thing I want to say about Costco is more often, as Dennis just alluded to, more often than not, the stock does trade higher after its earnings reports. I'm talking 1 day, 2 days, 3 days, 1 week, and 2 weeks after the report. The stock is higher about 2/3, 3/4 of the time, with the exception of a couple of bad quarters they had. And I'm talking over the last 3 years here.
Yeah, I like those kind of statistics in a normal market,
right?
But this is not a normal market.
It's a hard market to trade individual stocks. And from an investment standpoint, I'm lightening up. I've been using the rallies to lighten up because I don't think we've seen the worst of this thing yet. But as a trading standpoint, the fade trade has just been working. I mean, Costco's been going, but the other stocks, I mean, let's look at the last, 5 trading sessions. We were down basically 1,000. Then we were down again, but then we kind of reversed that day. Not even, looking at the Friday when I was gone, we were down 1,000, then we rallied back up 1,000. If you're just talking Dow points. The next day we ran basically 1,000, and then we gave it all back, and then we ran the next day. I mean, we're up, down 1,000, down 1,000, up 1,000, down 1,000, up 1,000. I mean, we're down today. So if you're playing it that way, probably should be a buyer here from a trading perspective. With that being said, I think the news flow, I'm more inclined to sell the rips as opposed to buy the dips because I believe the news flow is going to get worse. Once they start testing and we start actually saying, hey, we have just as many cases as they do in Italy, because I believe that's what we have over here. I think we're going to be just as bad a shape when this is said and done as they are in Italy. And the main reason that they're obviously have a lot more cases in Italy is because they're testing everyone. Once we start mass testing, and we know that's coming, Penn said yesterday they got more test kits coming. There's going to be 100 clinics throughout the states that can actually do this thing by early next week. We were looking at 6. We were looking at up till this point in time, 6 clinics testing or something like that with the numbers. Now they're going to be over 100. So we're going to start getting more testing, which is inevitably going to give us more cases. And maybe, we obviously hope the deaths don't continue to go higher. But with that being said, it's hard to just say, yeah, we're going to go back to the all-time highs and everybody's going to shrug this off. If there's people, not being allowed to go into stadiums and stuff, it's going to be spooking the market, and there's going to be people not wanting to leave their homes. That's why I think the news flow is negative to come. That's why I'm lightened up.
You know what? I'm going to call this the Morgan Wallen market.
Why?
Crickets. What do you think? It's a country song, and it's called Up, Down, Up, Down. So this is the Morgan Wallen market.
I like your accordion chart analysis better. I can understand
that
because I know him. I didn't know that person.
Morgan Wallen. No, he's good. He's good. He might do that with Florida.
I don't like country music though, really. So
yeah, you do. You just listen to. There's a country.
I like that 5 o'clock somewhere song from Alan Jackson.
There's a in Jimmy Leamington. Buffett. Dennis, I'm coming out to visit you. There's a 95.9 is in Leamington. It's
new. That's where I was born. New country station out of Leamington.
Yeah.
So
this
is blasphemy right now when I'm saying I don't like country.
Right. Stocks, ratings, analyst ratings, stocks.
Do ratings matter?
No.
And the one thing is, and I will say this again, is ratings in a market like this don't have much influence, and that's because everything is just moving with the overall market. You do see if when it's a smaller one like Snap gets an upgraded with Campbell's, and obviously the overall market as well. So Kroger, I think on pullbacks, they buy stocks like this too. So I don't mind this stock here. Just like Campbell's yesterday, I was like, I don't want to be short it. I was like, I don't know if I'm buying it at 50.5, but I was like, I don't want to be short either. And it kept ripping here. So I didn't trade it. But again, same story with Kroger. It's up. This isn't the kind of stock they're going to smack on a coronavirus. This is a stock that can actually benefit from the Costco trade for other intents and purposes. It's not Costco, but those Kroger stores get busier. People are stocking up on supplies. So I think when you get a pullback, I'd be a buyer.
All right, we got about 6 minutes left here. We'll let Spencer still lead the way here.
Oh, I can lead the way. All right, then let's look at.
You're awful quiet when Marc was talking. I was gonna jab you with a pen or something there a little bit.
Oh, violent, Joel.
Okay. I only do that every once in a while.
Okay. Let's look at
Burlington. Spencer just moves a little bit away. Okay,
yeah,
then I'll just move my desk a little bit further.
My chair over here. Burlington had earnings. Was it yesterday or this morning?
No, yeah, this morning. Yeah,
it was this morning. Yeah, they beat, and they're showing some sales growth.
Stock's down slightly. retail's in the gutter. This is the kind of stock that has been loved for a long time. Again, I don't want to own any retail stock though, even Burlington, because people aren't going out. They're not going to Burlington stores either.
Yeah, I'd be careful on this one. You're like, oh, well, we were at 250. Oh, 215. I can't sell that. I'd lose $35. Then you look at the monthly chart here, and you want to go back to the low. We're taking out some monthly. Well, where are we at? Where's the monthly low? The monthly lows here are 210, 211. So I wouldn't hit, I look at that as support, a long-term investor until you, actually the last 2-month lows, 1069, and I mean, we're still early in March, but 1069 and 1032, like there it is. There's your support. So holding 210, I still like this long-term trend. Under 210, I don't know, 180 was a pair of monthly lows too. 188, 187, 88, 77, and 190. So 210, 190, super extra long-term support levels.
Someone had asked about, oh no, I just lost it in the chat. BGS. DC1 asked about BGS here. I'll just pull up a chart. It's not one that we've looked at.
I don't follow that stock at all. It's been a nice rally here. Food stock. So is this packaged foods? I don't even know what BGS is.
I'll be honest, I don't know this one.
I've traded the stock before, but I don't know if it's packaged foods or if it's, it's different between packaged foods and restaurant food supply.
Yeah,
it's a big difference. That's a good point to make right now here.
Packaged foods.
Like packaged foods that you're selling in stores, okay. If you're a food supplier, like you think about like, and obviously not publicly traded, like at Gordon Food Services, if there's stuff like that that are supplying to restaurants, those I wouldn't want to own.
Oh,
this packaged foods.
This is the company that makes cream of wheat. I'm the only person under the age of 50 that likes
packaged foods are in favor right now. So on pullbacks here, did they report or something?
Yeah, they reported no, they did not report.
Oh, so it's just a technical. I mean, the trend's your friend. It's been coming up here. It's
long-term trend is not your friend, but the short
overall trend is not your friend for sure. This thing's been going down. I meant the last 5-day trend.
You know what you could do? I mean, and I'm not a big trend line guy, and obviously everybody's computer and charting and scaling looks different, but man, you could buy a trend line off that 50 high, 5180 high, and bring that baby right down. You got another high in 1747. You got another high at 40. Boom, boom, boom. Just bring that thing, that big old steep trend line all the way down here. And you might be busting above that. I'm just eyeballing it. I'm no super extra technician, but it looks like you could be, breaking above a 3.5-year trend line.
Packaged food companies are in favor here right now. Kraft Heinz, think about this one too, and we don't talk about it a lot, but you know what? On a pullback here, it's actually pulling back this morning with the overall market. It's the kind of stock that they actually, for once, this has been the hated of most hated. You know what? This is one that could catch a bid. There's packaged food companies here. As much as they bought Costco, I think the money will eventually flow into packaged foods here right now. I'm not saying these are long-term investments, but if you want coronavirus trades, the Campbell's is taking off. General Mills is having pretty good. Maybe KHC's due for a bounce here too. So that's one I would watch. Yep. KHC, BGS, maybe same story. Packaged foods. I like those companies right now as coronavirus plays.
What about What about our good old? Where is Kellogg's headquartered, guys? Come on.
He has this out every time, and I never remember.
It's Battle Creek. I've gotten it down by now.
Battle Creek.
Yeah, there's another one in the
good people of Battle Creek.
How about Tyson Foods? That chart's
chicken.
I don't know about chicken.
I want packaged foods. Like obviously they make some packaged foods as well, but I'm more like, that's going to go a lot to restaurants too. I would assume Tyson Chicken probably selling a ton of chicken to restaurants. I don't like it as much. I want to be buying stuff that's sitting on my Costco store shelves in a can. Campbell's soup, Kraft Heinz would have a lot of that stuff. I mean, obviously it's mainly ketchup, but I don't know how many people are stocking up on ketchup. So maybe Campbell's is a better play. General Mills, Kellogg's, Tyson, they've been selling a lot of chicken to restaurants, and I don't think people are going to be going to as many restaurants.
Hey, Dennis, is Beyond Meat packaged foods? It's made in the lab.
Maybe.
You just do a big old curveball at it right there. Dennis was like,
I'm stumped on that one. I've been stumped on that one for a long time now.
Dennis was at a loss of words. Can we document this?
I don't know what to say about Beyond Meat. No trade. That's a curveball you threw me. I don't hit curveballs.
Dennis is like, he put a pinch hitter in on that one.
Yeah, that's a curveball. I'm not in.
We'll do one here for Juan Pablo Posada. I just like saying his name or his screen name. I'm sure that's not his real name. Maybe. T-Doc. Boy, oh boy, what a run this thing had, and it's just clinging to this. Well, 120.
It's a coronavirus play too, though, Joel.
Oh, is it?
Oh yeah, Teledom.
Yeah.
So this is a pure coronavirus play. I like it. I like the setup here. The 120, as long as you're above 119.37, I actually like this one.
Okay.
This sets up well. Below 190, so you stop out, setting up a trade for you. I would stop out below the 119.37. Maybe give yourself a buck below that. Say 118. If they start to go and they start to get concerned about this could rally. This can actually go up if the market goes down. So you know what? I don't mind this TDOC.
You want another coronavirus stock that we've left
always
off? We've totally ignored
what?
Generac.
If the power goes out,
come on,
no,
Joel.
what are you talking about? The end of the world here?
Come on,
It's a hurricane, Joel.
Yeah, so power. We still have power.
I hope the power is not going. I wasn't prepared for the power to go out. Now you're spooking me.
Yeah.
I got my store. I got my canned goods. I got, I've got my mask. My mask is right here. I'm not prepared for a power outage, Joel. Now you got me scared.
I got a generator.
Joel's went and bought a generator.
Oh, I've had a generator.
Preparing for the grid. You know what?
Whole nother level.
Hey, I wanted to say, if the power grid fails and we really are going into a whole world crisis, those Bitcoins are going to be in trouble. Maybe that's why Bitcoin can't rally. This is going to get real ugly. We're going to have no power. Not going to be good for your Bitcoin when there's no power. If you're buying Bitcoin and you think it's going to a zombie apocalypse, you're not thinking that one through. But anyways, the power. We're not saying power's not going on. I don't think Generac.
Look at the chart. Did you look at the chart?
Been rallying, yeah. I don't know why.
Yeah. You know. For CODX, we had that as a coronavirus play stock.
Yep. This one's
very interesting chart here, changing up 240 here. I'll just make it simple. You had a high 21.75. What you gave back, like, let's just call it $10 on that. So 16.30 is my area of interest here. Your 2-day high is 16.98. So let's see what happens. Some people may be trapped on this one. Let's see if you can keep the rally going. Really like to see it close, over 16 and a half, over $17, and we'll take it from there.
All right. I think that's as good a place as there is to wrap up today. We're getting a round of applause from the peanut gallery over there. Thanks to our guest, Marc Chaikin. Thanks to everyone in our chat who stayed with us. We appreciate you guys. As always, you can catch our podcast on iTunes, SoundCloud, Stitcher, Spotify, TuneIn, or watch the replay of the show on YouTube. Shoot us an email, premarket@benzinga.com. Call us 734-494-0246. And please remember, all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Everyone have a great rest of your day. Be safe out there. As always, check those stops. We'll be back with you on Friday.